Most people believe wealth is the result of luck, intelligence, or access to secret opportunities, but when you study markets closely and observe how successful investors and operators actually think, you realize the real difference is far more practical and far more uncomfortable, because wealth is usually the result of standards, discipline, and the ability to think clearly when everyone else is reacting emotionally. On this channel, Common Sense Investing, the goal is not to predict the future or chase hype, but to understand what's really happening beneath financial headlines, because once you understand incentives, psychology, and long-term implications, you begin to see why some people consistently build wealth while others remain stuck reacting to noise. One of the most important patterns you notice is that successful investors and builders spend very little time chasing random opportunities and instead spend most of their time removing friction, which means eliminating the behaviors, habits, and decisions that quietly destroy progress, because friction is everywhere in financial life, appearing as emotional reactions to market volatility, impatience that leads to buying high and selling low, distractions that prevent long-term thinking, and inconsistent strategies that interrupt compounding. Most people believe success comes from doing more, trading more, reacting faster, or constantly searching for the next big opportunity. But in reality, success often comes from doing fewer things and doing them consistently, because every emotional decision, every panic reaction, and every deviation from a sound strategy introduces friction that compounds into worse outcomes over time. This is why the most successful investors appear calm during uncertainty, not because they know the future, but because they operate from standards rather than emotions, and standards determine what you tolerate, what you accept, and what you refuse to do even when everyone around you is behaving irrationally. Investors with low standards tolerate emotional decisions, short-term thinking, and constant strategy changes, while investors with high standards commit to rational thinking, patience, and consistency, and over time, this difference quietly compounds into dramatically different financial outcomes. Another critical shift that separates wealth builders from everyone else is ownership thinking, which means taking responsibility for decisions and outcomes instead of blaming markets, timing, or external conditions, because once you take ownership, you stop reacting passively and start thinking strategically, asking what mistakes can be avoided, what opportunities exist beneath uncertainty, and how your behavior can improve over time. Markets are driven by psychology as much as fundamentals, which means fear, greed, and herd behavior constantly create inefficiencies, and investors who understand this do not see volatility purely as risk, but also as the mechanism that creates opportunity, because mispricing exists precisely when emotions dominate rational thinking. Over time, the most important advantage is not intelligence, prediction, or access to information, but consistency, because compounding amplifies whatever behavior you repeat, whether that behavior is disciplined and rational or emotional and reactive, and small differences in mindset, patience, and clarity produce exponential differences in outcomes over years and decades. This is why financial success rarely comes from one breakthrough moment, but instead comes from sustained rational behavior, clear thinking, and the ability to remain focused on long-term outcomes while others are distracted by short-term noise. The reality is that markets will always be uncertain, headlines will always create fear and excitement, and most people will continue reacting emotionally, but those who build wealth operate differently, focusing on principles instead of predictions, discipline instead of emotion, and long-term compounding instead of short-term reactions. This is the core idea behind common sense investing, helping you understand not just what is happening in markets, but what it means, why it matters, and how you can use that understanding to make smarter financial decisions over time. Because the true advantage in investing does not come from predicting the future, but from thinking clearly, acting rationally, and maintaining the discipline to stay consistent while compounding works in your favor. And if you want to build that mindset and understand how money and markets really work, subscribe and continue learning, because clear thinking is one of the most valuable financial assets you can develop.